In this lesson, I'm going to be sharing with you a scalping session of a price action trader. We're looking at S&P 500 and mini futures. The structure of the market is, for the most part, a trend range, EMA, the supportive indicator, is flat. I see consistent price swings up and down. I'm following the trend line rule. The downtrend played out with the break new extreme, but the uptrend also has closed outside, attempt to create new high, very close to being new extreme. However, right now price action is consolidating. This is a no trade zone. So I don't want to be taking setup in the middle of congestion like this. So right now what I'm thinking about is letting this price action to break in either direction, and then I'm going to continue doing the analysis of the market. Right now I have to wait this congestion out. The sell-off was so significant, which means I have to redraw a brand new downtrend. Now the push down is strong, however, I also need to respect the short-term correction part of the main channel. As you can see how nicely the channel fits, the candles are inside, so I cannot sell as long as this uptrend is in place. So even though we are bouncing at the EMA, I'm respecting the short-term correction at first now. Because the structure keeps evolving, I'm looking for another wider downtrend because I have first two swings here. Third swing confirmation. We had a visual two-leg up pullback. This is the first leg up break, second leg up, combined with the small resistance, which tells me this is where the correction phase will end. But there was no break below this initial bearish bar. It stalled with inside bar, so I didn't really like taking. I was hoping we would get lower high confirmation setup, but lower high never formed. Now we have small overshoots, so I'm going to be respecting this bullish correction. As you can see, we started with consolidation, we broke lower. I was looking for channel, and because the downtrend is looking quite strong, this two-leg up pullback played out and there was some rejection. I'm drawing even wider channel to make this channel proportionate. So because I have small overshoot, I'm going to be a little bit careful selling just yet. Let's see what's going to happen. I can widen it a little bit, but I would have no confirmation. Actually, I have a tiny bit of confirmation, so I'm going to be analyzing this rejection at the EMA closely now. The main downtrend has a break, so according to trend line rule, I expect for this downtrend to get new extreme. The uptrend played out with the break, new high, another two-leg up pullback. The signal bar for second entry short was bullish bar, and it was above EMA, so I don't really like taking that just yet. The double bar entry would be quite significant, so if there is going to be lower high confirmation setup, I would consider it would confirm the visual two-leg up pullback and the fact that we need to get new low according to trendline rule. Alright traders, it looked close like we would get lower high, but there was no break below this bearish bar, so there is no lower high triggering. So there is no entry for me just yet. It looks like the market wants to correct a little bit more. Right, traders, I'm resuming the video as I entered a lower high confirmation setup of the new low first entry short, second entry short. Our analysis basically remains the same as we had earlier. This time the wider uptrend played out with the break new extreme. It is a first leg up, break, second leg up. We broke below EMA, we trapped all the bulls after the uptrend played out and two leg up pullback played out. So you can see there's the bullish bar, they all got trapped. Lower high confirmation setup of the second entry short, correction played out. The main channel needs new low, so this is my target. This is what I'm thinking about, following the main bias. I'm scalping 6 contracts for 2 points, and I'm leaving 1 contract as a runner in case market does something unexpected and the push to a new extreme is going to be significant. We haven't really scalped out yet, so we'll see if we can manage to get the scalp. Right now we're correcting, but I'm fairly confident we're going to reach the new extreme, especially if even now the wider channel played out with the break and the new extreme. You can see my risk to reward is very close to being 1-to-1. That's how I like it. Alright traders, and we got filled. The main portion was the scalp. The runner is going to be just a bonus now, in case this downtrend is going to kick in and the move to new extreme is going to be significant. So hopefully it makes sense. We're looking to sell high, but the correction phase will end. And this is exactly what was the plan here. Following the price action rules to the T. As you can see, downtrend working, lower, clear bias, clear channel established. Push phase, correction phase, push phase, correction phase, push phase, correction phase. I'm following the short-term channels. I'm following the visual aspect of two-leg pullback. We sold high because the new low was the target, and you can see we already created micro double bottom, actually not fully new extreme just yet, but it's okay. We got our scalp, and I waited for the little push below EMA to confirm truly the second entry short that the bears are in the market, that they want to see the new extreme. So this is how I'm applying the price action rules. I don't need any indicator. I don't need any other fancy retail strategy, really. Just reading the pure candles. It was a little bit about patience here because there was really no good two-legged pullback on the way down, only here, but it didn't trigger right away. But if you're patient here, you can see the market will offer you eventually a decent setup. And our runner just got hit. The downtrend played out with the break. Couple pushes to a new extreme. Right now we have push above EMA. The downtrend was strong, however, so I'm not thinking about fail second entry short just yet. Because when the trend is this strong, I don't really want to get trapped taking early reversal. You need to see some proven uptrend first. Now there's a chance that the market cycle right now will shift into a trend range, into consolidation. So I'll keep an eye on possible trend range. I came back from my break and we can see price action rules reverse the market. Downtrend break new extreme, strong push above EMA. So while the uptrend is getting confirmed and proven like this, we can finally start thinking about buying. There was a quite of an overshoot. We had a second entry long, but you need to skip the first second entry long after overshoot. You already know that. And you can see how far from the EMA the body is. There is still so much gap. And price action is not touching the EMA with the body. This is common trap, EMA tail trap. So you gotta be careful. Now there was no double trap, but there was great push above EMA and a high low, little bit of a breakout pullback out of this congestion. And you need to get new high for the uptrend, which right now we got the new extreme for the uptrend. So I'm pausing, looking to go long. I will see how the price action now develops. I expect a little bit of a correction down because we played out. However, if the EMA is gonna trend higher, that's when I would consider probably drawing a little bit of a wider channel, but I'm not gonna jump to the conclusion right now. I need to follow the rules and see if price action right now is gonna hold and we're gonna continue working higher. Alright, traders, I'm gonna wrap it up with my one single trade. Today's structure started with a consolidation where we're gonna try to locate important key levels. We can see there is bearish bias because the top portion of this trend range is completely empty. Price action only traded to the middle of the trend range, which means you have a little failed breakout, but you're not thinking about buying just yet. Given the bearish bias, now there is inside bar, actually double inside bar. This bar and this bar both are part of this bearish bar, which means by no means you can go long. You would need to see high-low confirmation setup or fail second entry short. So we're going to combine the inside bar with the bearish bias. You're not looking to go long just yet. Eventually, the push down was so strong. We are so far away from the key level that we need to adapt to a brand new downtrend, locate a brand new channel. We had a broad two-legged pullback. Unfortunately, there was no trigger below this bearish bar. There was an inside bar, so really no way for us to enter. Then we had a second entry short, nice big bearish bar. A little bit more aggressive, slightly above EMA. You already saw me trading the lower high confirmation setup. Once we have a break in new extreme, according to rules, we expect correction or reversal. Given how strong the downtrend was, I was leaning more towards correction. But as you can see, market reverse into a clean and strong uptrend, which gives you an information that the market is truly about to reverse. There's no denying that. You can't take the very first second entry long after overshoot, especially with such a massive gap here. Body is so far from the EMA. So definitely a trap that you cannot take. And then we had a great high-low confirmation setup, a little breakout pullback of this congestion. Now you can see this setup is very similar to this lower high, and this is why these lower highs and high lows confirmation setups are so powerful. They're so beginner friendly because they give you the extra piece of confirmation. Okay, because when you're waiting for the push below EMA and push above, this means this is a confirmation there is no broader channel. The sellers or buyers are in the market and they want to get the new extreme. Now you have to pay the market for more information, which means your entry is a little bit higher or lower than it would have been had you sold higher or bought lower. But that's not a problem. These confirmation setups are so reliable and really beginner friendly. This is your focus. This is your bread and butter because they give you all the information you need with the push below EMA and the push above EMA, and you expect the new extreme playing the trend line rule. Everything can be predicted based on pure candlesticks. Then the broader channel developed. Now we have sort of like a triple test, but everything is so stacked. Signal bar is bad. I don't really like double bar entry given how stacked it is. We have a possible breakout pullback here out of this congestion, 2 key entry points, but the signal bar is an inside bar, so I'm really marking this mainly from educational perspective. Not really great setup because it is an inside bar and there is some potential loss of momentum. But we have 2 key entry points combined with the breakout pullback, so we can make a case. You can see where the major moves form, and at this point it's pretty much getting way too late. So this is the structure for today. The structure was really predictable, not that many easy setups, but that is completely normal because a lot of traders are still on their vacations, taking days off, because we are in a period between Christmas into New Year's. So a lot of traders are basically taking off the entire week. But the overall structure was still fairly predictable. Either way, I hope you had a good trading day. You find the lesson educational. I'm going to wrap it up, and I'm going to talk to you next time. Good luck with your trading.